Hey Forex Fortune Hunters, Tom Wilmot. I'm recording this video on 7 February 2020. I want to show you in this video how our Metatrader template, Super GMMA Quick, can really help you survive with that small Forex account. You'll be trading with the trend. We're going to review the entire week's worth of entries on a 30-minute chart, so hold on to your hat. We'll get started right after this. Okay, Fortune Hunters, let's get started. We're going to take a look at the AUD versus the US dollar on a 30-minute chart for this week of beginning back on February 2nd, Sunday. Now notice here that this is the weekend, okay, with these two lines. This is the opening on Sunday, and Monday usually doesn't amount to much. Mostly people are coming back to work. There haven't been too many announcements unless something really broke over the weekend. And so as a result of that, Monday tends to be one of the flatter, less consequential days of the week. Typically Tuesday, Wednesday, and Thursday are your hot days, and then sometimes Friday's a dud. Today with the jobs report in the U.S., there was some momentum. Also, I picked the AUD in this particular case because of the coronavirus that is expanding, and basically people have been predicting that Chinese GDP might just drop to zero this year, or over a couple of months at least, and that obviously hurts Australia, where China is its biggest trading partner. So let's just take a look at this and see what happens. Obviously what we have here is our Super GMMA Quick. Now what I did with that was to add multiple moving averages here, which represent the longer term investors. I go from a 30 EMA to a 50 EMA by fives. And then down here I have 6 to 15 EMA. So this is my short-term kind of scalping stuff. Now, basically you can notice that even though there are some upticks here on Monday, the fact that this is basically facing downward still from the previous week. Let's back up and see what happens. See, this is facing downward from the previous week, Thursday and Friday, back on the end of January, the 30th and 31st. And notice that we had some pretty good moves last week as the fears about the coronavirus were really hurting the AUD against the dollar. Now you come over in here into Monday, we have some just chop and consolidation. And then on Tuesday, in the early morning hours, we have a big up bar on this 30-minute chart. We actually roll over to the upside with this white medallion is representative of the lower time, the longer term time frame moving averages. And what the key is to our strategy is to see this and then wait for a dip. And in fact, that's exactly what we got on Tuesday morning in the kind of London time frame. A pullback into these bands. Notice that I've got 3 of these on here to oscillators for you to see. But bottom line on this one is we do have the pullback. You can see the pullback. Now don't always wait for the first white up bar, because sometimes you get a kick up before that. These are trailing indicators. Notice that our RSI worked great with our 45-55 band here. We pulled back into the bands but couldn't breach it to the downside. And we're way oversold here on the stochastic. And it's a little hard to see, so let me open this up for you. But bottom line is you want to be able to avoid being long when the shorter time frame stochastic is trailing or beneath the longer term one. You want to wait for the crossover and then the move higher. Okay, so bottom line, here we go. This was that uptick. Then we had the up move in the longer term moving averages, our pullback. Here we go. Now we've got the tick up here on the stochastic. We're rolling up above. This next pullback just brings us to the top of our band. Obviously, we have a little bit of a pullback here and then a continuation. Now, I'll go back so it's a little easier to measure. I usually like to take that first pullback after the uptick on a 30-minute chart, and we can measure from here to here and see even on the Australian dollar, which is always not a big mover, we had a 34 pip move. And in a small account, if you're just grinding forward, that's the way you want to be. And notice you're going to be in a situation where you're trading with the trend. You're not trying to take a trade up here to the downside, even though it's reasonably significant move down. That's not the way to go. Stay with the trend. Stay with the longer-term investors. Okay? Same thing happens now on Wednesday morning. We got a pullback in the early morning hours in the Australian session, and then we had a tick back up here. Notice we pulled way back into the bands. We had our pullbacks and so forth. You could have 1, 2, or 3 of these oscillators on should you wish to do so, or none. But here we had another day where with this pullback we had a 37 pip move again. And so we have some pips to work with. And notice that our stop loss, which would be down here probably in this area, even if you got into the trade here, your stop loss is 9 pips against 30, and so you're 37. So you're really working on a 4-to-1 risk-reward ratio basis. Now what happens is midweek we get some chop and consolidation. Notice that this is a little late in that uptrend that we saw from Tuesday and Wednesday. Stay kind of clear of this. You want to be a little careful, especially with the Aussie dollar. You're probably not going to get the kind of pips you want on a 30-minute chart. So wait for this particular situation here. Here's our twist down with an orange medallion of the longer-term chart. You can see it's building, building, building. We come to this place right here. We have a little pullback, then we have a second pullback towards the end of the day, and then a dramatic drop. Another pullback could be an entry for you as well. Notice this is where our tops were. Okay, these are the areas where you want to be thinking about entering short, and then we have that nice move down into the jobs report on Friday morning. So here we go. We ended up with another trade of 46 pips. So even if you're stopped out with 10 pips a trade, let's say, on 2, maybe even 3 of them, with these 30s, 30 and 40, that's 60, that's 100 pips. So you're trading risk of about 30 for a 100 pip week, and certainly there's nothing wrong with that. So once again, I hope this kind of instruction helps. And if you want to compare any of our other templates and see how they react to the same situation with the Aussie dollar for the week, that's instructive too, whether you take the double whammy with the trend magic and a couple of other moving averages, whether you take any of the other several that we've put on our website and here in our videos. If you need any of the indicators, please follow the link down below in the description of this video back to our website, fxfortunehunter.com. We're happy to give you an invitation to our Dropbox file where all the indicators and templates are located. That should make it easy for you to stay with the trend and build that small account. So thanks for watching, and see you next time.